Very good morning to you here from Lagos, our distinguished guest joining us from wherever you are joining us all over the world. I am Owo Okiti, and I'm the Managing Director of Business Day. Permit me to first say best wishes for the year. This is our first conference this year, and we are looking at the Open Banking Exchange with the theme Open Sesame, Unlocking the Future of Financial Innovation Through Domestic Third-Party Providers. As you would expect, this is about technology and the improvement in technology. And from our own experience, technology does three main things. And I'm sure you'll be hearing about those three things today as it affects banking and open banking and the exchange of values. The first, every improvement in technology helps us to lower the barrier in terms of distribution. The second thing is that it does help us to reduce the cost of some exchange or of providing some kind of value. And of course, I'm sure the insights and the discussions and the engagement that you will hear here today will be talking about some kind of versions of all these three things, especially as it relates to the banking space in Nigeria and of course, globally. So open banking is about that and how it's going to shape and shift the space in Nigeria and in Africa. So after my introduction, you're going to be listening to the first panel talking about open banking, the situation progress to date. And of course, you're going to be listening to also a presentation by the MD of Intrasat. And of course, the second panel will come up after that, stubborn adoption, keys to lifting barriers to user growth of third-party provider apps. I really, really do hope that you have a great time listening to listening to our experts that we have brought together here this morning. And I hope that this is not only going to be the start, but that this conference will be an anchor for the progress that we seek to make in this country and Africa. As we always do in our conferences, we do thank our our sponsors, because they have made this possible. They have made it possible for us to gather here and discuss issues that are relevant to the industry and of course to the economy. So I would like to thank Capital, Metrics, eTransat International, Wallace Africa, and Three Line Card Limited for their support of this important conference. I really, really hope and I look forward to the conversation that is going to be had of this morning. And I really hope that you find it very useful and especially something that you can use for the progress of your business and for the work you do. I thank you all. May I now introduce and permit me to introduce that's Folashade Femi Lawan, who is our moderator for the first panel. I thank you all and hope you have a great and enjoy the insightful discussions that we have this morning. Thank you so very much. Folashade.
Thank you very much, Dr. Ogo. And thank you, our star-studded panel. Good morning, ladies and gentlemen. It's my pleasure to be moderating once again this star-studded panelist. It's exciting to be part of another conversation of Business Day. That is an ongoing one, economic impacting conversation. Without further ado, I'll quickly go through the profiles of our panels, starting with Boye Ademola, partner and lead for digital transformation in KPMG. Boye is partner and lead for digital transformation at KPMG in Africa. He has over 20 years experience in technology, consulting, and currently leads KPMG's digital transformation business on the continent, delivering projects spanning digital strategy, innovation, and transformation. He is the author of several publications, including FinTech in Nigeria, Leading Through Digital, and Digital Channel Scorecard. He serves on the board of tech companies and is a thematic lead for NESG and National Assembly Roundtable on Data and Digital Economy. And I'll simply move to our second panelist. You're welcome, Boye Ademola, to this event. Adedeji Olowe is the CEO of Triumph Limited, a venture building and capital investor. Before this, he was an executive director with Systems Specs Limited, Remita, one of the largest fintechs in Nigeria. He was also the divisional head of electronic banking at Fidelity Bank PLC, where he was responsible for the turnaround of the bank's digital business. He was previously responsible for UBA Group payments card business across 19 countries. Alongside other industry veterans, he founded Open Banking Nigeria, the non-for-profit driving the development and adoption of a common API standard for the Nigeria financial industry. Adedeji was also with Atlas Mara as a vice president of cards and payments, FCMB and Access Bank PLC. He was an advisory board member at Valve International, a member of InterSwitch Group. And he has also been blogging at www.dejiolowe.com since 2001. Adedeji Olowe, you're welcome on board. And to the lady in the house, it takes a woman of timber and caliber to sit in the middle of these powerful men. Farah Ashiru Jitubo. Farah, you're welcome. She's the co-founder and CEO, CTO of Okra Incorporated, focused on building the infrastructure to allow Africans connect their bank accounts to third-party applications, enabling the acceleration of financial innovation in Africa through data. Before establishing Okra in 2019, she gained experience in building and scaling products in emerging markets and venture-backed startups by working with organizations such as Canva Tech Hustle, Sana Benefits, and Dosata. Farah also served as a co-founder and CTO of Shixx Studios, where she led the design and development of core technology for multiple clients, including Airtel, AXA, Mansadre, Money, MTech, Sanofi Pharmaceuticals, and Nestor. She is proficient in over 20 programming languages. Farah has worked with multiple 500 companies. She began a professional career with BMW, leading the efforts in design and creation of the interactive map for the BMW Museum. She has also worked with JP Morgan Chase, Fidelity Investment, and Daimler Mercedes-Benz. Farah holds a BSc degree in computer science from North Carolina Agricultural and Technical State University in Greensboro, North Carolina. And to the last but not the least panelist, Femi Omogbenigun, Managing Director, CEO, Three Line Card Limited. For over 13 years, Femi has played a major role in developing product strategies that deepen and broaden businesses within all payment verticals. Femi held a Bachelor of Science degree in economics from the University of Ibadan, Nigeria, and an MSc in National Business Information Technology from the University of Dundee, Scotland. He holds various certifications, including ICEL Business Analysis Professional from the British Computing Society, Prince 2 Project Management Certification, and Milahema Business Development Certification. Femi has a wealth of experience in business development, product design, and product development. He is passionate about problem solving with a special focus on using electronic payment system to create financial services solution for the unbanked and the underbanked. As a proven industry professional with remarkable expertise in developing strong client relationships, building outstanding teams, and a disciple for focus on the execution of operations, Femi is committed to helping businesses achieve results and high performance. So we are back to the crux of the matter today. Our esteemed panelists, I would love to start with Adedeji Olowe. In starting open banking, I will need you, Adedeji. Could you explain to this esteemed house, what is open banking in layman terms? I know you're a technical person. And why is it relevant in the financial services sector of Nigeria today? We need to know where we are going as a nation, as an economy. And a quick encouragement to our participants. Please, you are encouraged to use the Slido platform to send in your questions to our esteemed panelists using hashtag BDOBEX as a code. please visit www.slido.com. Just use Slido. Be happy to take your questions. Adedeji, you have the floor. Thank you.
Thank you so much. It's interesting to be asked that question because globally you find it interesting to be discovered that there is no consensus on what open banking is, right? But there are general concepts regarding what open banking is about. I know it has to do with APIs, using APIs to have access to data, but everybody can have access to data. Literally every single bank today has API access to their data, right? So what makes open banking to be open banking in general principles have to do with the fact that if a geography or a jurisdiction or a country is doing open banking, it means the API standard or access is common across all the players, that there is consent, right? The fundamentals of open banking is that the data in your bank account belongs to you, doesn't belong to the bank. I use it on, but it actually belongs to customers like as if they are kids. They don't understand what they're trying to do. Sometimes we need to safeguard the customer, but ultimately the customer has the last say. If I write a check today and I give to anyone to present on my current account in any bank, nobody's going to call me to say, are you sure you want to give someone money? Beyond confirming that I know what I'm doing in terms of authorizing the transaction, nobody's going to ask me if I'm speed or dumb to be able to give money to someone else. So the whole essence of open banking is to allow everyone and anyone to grant access to their accounts and their transaction and the data therein with full consent to anyone or any company they desire to do so. And that's the whole essence of open banking. And the ability to do that should be consistent across different banks so that if you have accounts in two different banks, you don't use two different methods to do the same thing. And your idea of standardizing access to account can be similar to what we all have in our pockets today, our debit cards or credit cards or prepaid cards. You notice that the same shape, irrespective of the bank, they may have different colors, but they have the same shape, the same thickness. And if you travel to any other country, you can use it without thinking, oh, will it size it? Will it work in that POS? It's because at one time, some people came together and said, you know what, let our card behave the same way. And you've seen the innovation that came out of that. And that's the same thing that has to do with open banking.
Thank you.
It's not too technical.
Thank you. So I need, in a nutshell, you're defining open banking that it's like letting customers have increased control over their data while supporting the innovation for everyone as we are yearning for. I needed to hear your parts on the financial sector. What's the relevance in the financial sector of Nigeria? And while you are that, I want to encourage panelists to make their contributions like a woman's skirt, short enough to generate interest and long enough to bring attention to the subject matter. So you are the founding member and now a trustee of the Open Banking Nigeria Association. What has the journey been like pushing open banking in Nigeria?
Okay, so the first question, which is why should the financial industry do it? See, everybody knows right now that look, the world we've seen what technology is doing, right? And technology has moved to a level where practically everything is driven by APIs. APIs, in fact, some electric bulbs from Philips that you put in your house actually have APIs. You can build an application to control your own bulbs by yourself. We know it's natural for your banking activities to have APIs on them as well. Now, APIs create more opportunities for innovations and transactions to flow. So it can go to 100 times. And for people like Farah will say, there is a whole lot of demand in Nigeria for credit. In fact, one of the biggest challenges to credit in Nigeria has been the fact that there is no access to information to score credit. We know there's about, I did a study with some guys, and there's about 51 trillion naira worth of credit gap in Nigeria today. And we all know practically everybody has to save for every single thing they want to buy in Nigeria today. Without credit, this country can't grow. Now, but if you don't have access to credit information, a lender is not able to give that credit. Now, imagine if what Nigeria could look like if every single bank provide easy access to transactional information via API that people like Farah can sell to lenders. It means that more Nigerians, millions of Nigerians will have access to credit. Now, if you people have access to credit, what do they do with the money? They use it to buy things, consumption. They use it to take their kids to school. They use it to pay for health. You can have an idea of what the multiplier effect will be on the economy, right? So it means that even how of course, it means there will be more tax for government to also collect as well. So removing barrier to innovation, right, can have multiplying effects. Let's take GSM, for example. GSM in Nigeria right now is about 11% of the GDP. 20 years ago, telecoms were like 0%. Now, that 11% is understating it because if you remove telephony from Nigeria today, even the 90% we have will collapse to like about 50% because banking can't work without GSM. Practically everything can work without those things. Now, there's the same thing that will happen with credit. It's the same thing that will happen with savings. It's the same thing that will happen with a lot of collection payments that we don't see now because we don't have those APIs. Now, in terms of the journey so far, we started at 2017. It's going to be 4 years by June. It's been quite interesting. The interests have been quite high. We have a lot of members. We have a lot of supporters. And then we've been working with the central bank as well. And hopefully before the end of the year, we believe that a definite regulation will come out because it's not about if, it is a matter of when. It's a natural progression. We can't run away from it. Without standardizing the API from banking, we will never be able to see the next level of innovation or of growth that we need.
Thank you.
Yeah.
My last question for you, before I move swiftly to Boye. In your conversation, you said sooner or later we should expect CBN regulation. That the big banks to open up for API in terms of open banking regulation. So far, what we have seen in Nigeria is a sandbox. The sandbox that CBN had released a policy document on, which we believe is a prerequisite. However, in America, North America especially, what we are seeing is collaborative partnership with the fintechs, which I believe is happening strongly in the Nigerian financial institution. So when we're talking about Nigerians needing so much credit, you are aware, having been a former banker, that in the system today, there are instant credits being granted across most financial institutions. So Nigerians are actually enjoying that. It's just by way of comments. But I need to hear finally from you. What are you looking forward to? What should we expect? UK type or the American style? Because the world is watching UK leading in that conversation.
Okay, thank you for that. So,
thank you.
Okay, so thank you for that. So globally, no two countries have actually implemented open banking the same way. Because open banking may be a tool, but what we are trying to achieve are two different things. In the UK, the government wanted to reduce the influence of the top 9 banks on the financial industry, and they used open banking to break that stranglehold. That was the reason. If you go across the pond and you go to Europe, the European open banking, PSD2, which is also the regulation that drove that the UK used as the basis for their open banking, is premised on the fact that they want citizens, everyone, to be able to grant access to their bank account. So the premise for each one is different. In Nigeria today, our open banking drive is more about financial inclusion and innovation, totally different. Now, why do I think CBN will come out with a regulation? It's not because I work in CBN and I'm not just starting what they are going to do. In December 2019, CBN has already sent out requests for information from the whole industry about their view on open banking. So CBN has been working on this for a while. If you look at PSV 2030, right, open banking is the #2 priority for the central bank in the next 10 years. So you can see their body language, you can see how they interact with the industry. And I believe 2 years is more than, probably 18 months, is more than long enough for CBN to come out with require rules to drive that change. Now, for Nigeria, right, in every jurisdiction, you need two frameworks. You need both a regulation, which can only be provided either by a regulator or an act of the parliament, if it's going to be a law, and you also need a standard. What Open Banking Nigeria does is we have created a standard to make life easy. CBNC have full control and also the prerogative. Will it be compulsory? I don't know. Will it be, but I suspect that it might be, what I would suspect is that it might be something that everybody has to comply with within a certain period. They might say that you don't have to do it, but if you want to give out APIs, it has to be through a particular, like you have in New Zealand.
Thank you, Adedeji. I'll leave you for a little while. So straight to Boye. Boye, the participants, we are sort of trying to hear from you. The potential of open banking to the financial services industry and the Nigerian economy. I would like to hear from your perspective. And what sort of conversations are you having with financial institutions that you support in this regard? Boye.
All right, thank you, Folashade. I just want to sort of build on what Deji started to speak about. I just want to say that open banking is a very strategic discussion for Nigeria. For me, for three reasons. The first reason is that we have a huge population that is underbanked and not banked at all. So we have, you know, if you look at the numbers I've seen last year, the banks in Nigeria are just north of 43 million or thereabouts. I don't know what it is now, so maybe it's heading towards 50 million. But if you look at our adult population, that means that we still have over 50 million adults that are not in the normal banking sector. So the big reason why this is important is that we cannot cater for these additional 50 million or 70 million people. And remember, we have a very young population that are coming into the fold every single day. We cannot cater for them with the current model, you know, the current model of the banks. Why? Because the cost to serve is too high. For instance, I'll give you an example. We're seeing that despite the fact that a lot of Nigerians are banked, they're still, you know, going to agents. So agency banking is important. We're seeing queues in front of ATMs. These things tell us that these models are, you know, for our market may be too expensive, and we need to find innovative ways of bringing down the cost. So when you're talking about the segment that is not even banked today, the current model of the banks, the cost structure will not allow us to make that penetration. And therefore, we need to be more innovative in how we serve them. So for me, that's the first reason why we need to do this, because we need to bring the unbanked and the underbanked, all right, more into the fold. The second reason is that if you are watching the trajectory of Nigerian banks, you will see that Nigerian banks are increasingly taking a leadership posture on the continent. And that leadership posture also, you know, it makes it really important that we're at the forefront of the digital transformation initiatives happening on the continent. The Nigerian banks expanding across geographies really are not planning to do that the traditional brick and mortar way. Bringing the digital play to the table is a big part of that. The third reason for me, and you know, really one of the most important ones is around this whole discussion we're having on innovation and how that is bringing in capital into this country, is contributing to the economy. Deji was talking earlier about how the telecoms industry, you know, is becoming a significant part of our, you know, economic output. Now, I'll give you some statistics that we have. In 2019, the three biggest investments into tech companies in Africa were all three into Nigeria. Investments into InterSwitch, a number of other fintechs. So here is why, for me, this is really important. we're beginning to see Nigeria, even though we're not always acknowledged internationally for this, but we're beginning to see Nigeria emerging as, you know, the nerve center of fintech and digital on the continent. And to accelerate that, to continue to encourage FDIs and investments, capital investments into this market, I think it's important we have a really clear direction, a clear national direction on what we're going to do on open banking. Open banking will only help to accelerate that discussion. It will help to bring more people into the fold. It will help to extend products and services than we're doing today. And frankly speaking, it will help to make us a model for what is possible on the African continent.
Thank you, Boye. Thank you, Boye. In your justification for open banking, you made mention of innovation, and then you also talked about the underserved. Are you saying in your conversation with banks, which I know you're familiar with, you are not as being noted for leading that conversation? The Fugas, when I mean Fuga, I mean First Bank, UBA, in creating innovation labs, where the terms and the model for innovation of failing fast and learning variation. Are you saying you're not satisfied with that, or you're not seeing enough? Because we need to dimension it and put this open banking into perspective. That's why I ask you, what kind of questions, what kind of conversations are you having with the banks that you have a relationship with corporately?
All right. Thank you for
we have not heard that in your conversation. Please.
Yes. Thank you for that second question. I think the way that I will say this is that the banks have made significant progress, all right? But be that as it may, we are where we are. And there is a whole new frontier that we need to seize, all right? So we have created a lot of innovation in this space. And, you know, this innovation really, like I said, not always acknowledged, created off the back of homegrown innovation. Of these are fintechs that are beginning to scale, which is that the banks are embracing innovation. They're setting up digital labs, fintech foundries, and all that. This discussion, we need to ensure that, particularly when it comes to open banking for me is an anchor, all right? As we look at ourselves as a country, if we take the digital economy, the concept of open APIs, open technology, which set of it is open banking, should be one of the anchors of the national discussions that we should be having. And I say that, you know, in the sense that we need acceleration from where we're station. More importantly, I think, is we need some concrete actions from different stakeholders. We need more from the banks in terms of disintermediate banks to the extent that banks would disappear. I don't think that is going to happen over the next 3 to 5 years. I think the banks have a lot of things going for them that need to be leveraged, all right, to go to talking about products and services that are published on a portal that can be consumed by a third party. And when we talk about, you know, products and services, I mean things like, take for instance, Shade, you make a really important point that, you know, they've done a lot. So payments and transfers, thumbs up. But if you look at digital onboarding, the ability for most banks to onboard customers using APIs, we can do a lot of, you know, things around onboarding. Another one is lending that they just spoke about. Another one is around self-services, like asking for your card, switching off my debit card if I think there's a fraud on it, you know, and you can go on and on around these banking transactions. The idea is, you know, for the banks to understand that, you know, they've come quite some way, but open banking will take this to the next level. It will not lead to disintermediation, in my view. It would only lead to you know, a bigger pie for all the players in the industry.
Thank you, Boye. May I also chip in before I quickly move to Femi. Farah is the last panelist, but not the least, because there's a conversation we need to have. I wanted to build a foundation. With your experience in the financial economy, Boye and Dadedeji and the rest of us, you're well aware of the giant stride made by financial institutions in Nigeria. We were on lockdown for more than 6 months as an economy. Transactions were going. How do you think financial institutions were able to swing that? And I don't think any financial institution is afraid of open banking. Perhaps the conversation needs to be deeper, because there's already collaborative partnership ongoing. Most of the digital products that are rolled out are done in partnership with fintechs. Part of the conversation we need to have is to probably ask fintechs to concentrate on those value chain segments where the greatest source of customer convenience meet the largest profit pool, where we are still delivering stuff. Don't forget, customer experience is a game changer in the world we are in today. So we need to actually have all the facts to show, yes, there's room for improvement, but the banks in Nigeria have actually done a lot. In digital onboarding, people don't need to come to branches to get their cards working. Let me give you an example. I'm not here to market any products, but First Bank launched virtual card, what a plastic card can do. We thought this information at our disposal, but we'll continue the conversation. And let me move swiftly to Femi.
All right.
Femi, you are not new to collaboration. Having recently signed a deal with InterSwitch to handle all your switching services. What do you think about open banking? Is it going to broaden collaboration in the financial services sector? By the same breath, I need to hear from you. Do you think banks will buy 100% into open banking, given the potential to create more competition using data collected? Femi. Okay, so let me quickly move to Farah while Femi gets ready. Our lady in the house. Farah, are you there with us?
Yes, I am. Thanks for having me.
Awesome. And I'm sure you're following the conversation.
Yes.
Please tell me your perspective on open banking for the financial services sector in Nigeria. You have had a heated conversation, just warming up for this. I know you have come up with a transparent pricing model that makes sandbox testing and the path to market accessible for many startups. That's commendable. Tell me more about the Okra business model in responding to your perspective on open banking as well. Thank you.
Sure. Sorry, excuse me. That's a great question. So I think Deji, just to piggyback on some things he was saying, said it really well. You know, every country that's done open banking had an incentive. So it's like, what's the incentive? In the US, when you saw private businesses solving the problem, instead of a regulation, they were creating jobs, they were making a way for, it's a very big one. As a customer, you are the owner of your data. The bank is a custodian. And similar to, let's say, ride hailing, before Uber was a product, private business came in and showed you another way of doing so. So I think that, that's kind of how I look at open banking. It's look at the financial institutions, you have to see ability to build and businesses, the ability to build services that actually create value for their customers. Because, another thing that I think Boy was talking about is that, Africa needs to be able to compete. How do we compete in the, the next industrial revolution, the data age? There's no understating what the impact of data is going to be 10 years down the line, 20 years down the line, 30 years down the line. And, what would we have done to take part in this, not just for ourselves, but, for the underbanked, the unbanked? How do we create inclusion around this? So at Okra, what we do is essentially enable the customer to have their ability to give access, grant access to their data to a lender, so that they don't have to pay their rent, a year up front. They can, split it up into chunks, or I can buy a car and drive it off the lot and split it up into chunks. And of course, lending is that sweet spot, and it's it's credit. Like Deji said, if there was no credit, we'd probably collapse. But also it opens up the ability for you to have products beyond that, innovation beyond that, the ability to do things like being able to build products around not just in the health space, in the fintech, in the agri-tech, all over, because we have so much opportunity in Nigeria, because there's so many other problems that we're solving that are completely different than what you see in in other parts of the world. So for us at Okra, that's essentially our business model. We enable
Culinary Delights was actually started to tell innovative, exciting, and positive food stories out of Lagos, Nigeria.
getting funding is great. If you bring someone to your business, you're able to grow business, you're able to
Being the foremost luxurious goods company in the entire West Africa is a big deal.
Will you have every opportunity? No. But you see, the opportunities you lose on account of your value system, that's your opportunity cost.
Create more solutions and solve more problems, and that's always going to be a driver. In terms of what is received, I think that every business has different needs and different different problems they're trying to solve. So I think that we'll even see those numbers increase as well over time as we continue to solve these problems and and create value from our businesses. So I think that that's my take on that.
Thank you. Let me quickly go back to Boye. For the benefit of our participants, what like fintech and game changers are freely thrown around these days? They are the buzzwords. A few companies have already taken the lead, as you're well aware. Are you concerned at all that in Nigeria we may have too many copycats pitching copycat solutions, leading to an app glut and target market fatigue? I know we're all concerned about the underserved. I'm still going to ask the question, how open banking affects the woman in the village who doesn't even know anything about financial inclusion, despite huge agents all over the area. For example, First Bank has at least one agent in one local government of Nigeria. And still, the consensus in this room from this panelist is that there's still a huge, yes, we agree, huge unbanked, and open banking is going to reach them. So I need you to respond to that very quickly, Boye. Participant, please use Slido to send in your questions, please. Thank you.
Thank you, Folashade, for another challenging question. But, there's a question you asked that, if you permit me, let me just quickly touch on that question, which is this whole discussion about, market-led transformation with open banking versus regulator-led. And, we need to be contextual when we have this kind of conversation, all right? Contextual understanding our market. If you look at what has happened that is transformational in our market over the last few decades, you will see some of the most transformational things we've done around payments, the payment systems 2020 vision, and we're now crafting one for 2030. You will see it's been around NIPS, it's been around InterSwitch, all right, being able to switch and move transactions around the industry. You will see it's been around the banks coming together, either bankers committee or the banks coming together, as we saw with InterSwitch, when InterSwitch was originally formed. So here's my view. My view is that the regulator, particularly the CBN, has to be a big participant in this discussion, all right? I will not support that the American model, the market model, allowing the capital markets or the market forces to drive it is going to give us the traction. I will think, I'm not against that view, but the point for me is that we need to be contextual. And my sense is that if you can get the central bank and you can get the bankers committee to buy into this, all right, to drive the conversation with fintechs and other third parties to see what has been done in other climes. If you look at the global benchmarks when we're talking about open banking, it's not in the US. Well, I stand to be corrected. You are looking at Singapore. That's the Monetary Authority of Singapore. You are looking at the UK. You are looking at the EU. These are the guys driving the transformational initiatives around open banking. So I think for me, it's important that the CBN, the leadership of the banks, and of course, fintechs and other third parties are important stakeholders and drivers if we're really going to, get this traction. Back to your question, your question really is: are we seeing a multiplication of fintechs that really are not adding a lot of value and they're crowded in the same place? My view is that we're not seeing enough. My view is that we're scratching it. We're scratching it, And I have the opportunity to visit, China, Shenzhen, other fintech destinations in the world, the UK, the US. And, a lot of these fintechs, they actually fail. Israel, Tel Aviv, being there in Tel Aviv a few times. One of the things I remember, one of the biggest VCs in Tel Aviv told us is that you respect, tech innovators when they have failed before. So for them, because in that failing, there's a lot of experience, there's a lot of learning. And so for them, they're burning capital, not deliberately to make you fail, but they know that they're building they're called the tech nation in Israel, the startup nation, but they know that they're building a depth, all right, with the tech companies, and in our case with fintechs. So my view is that, I really sort of don't sit on the side of people that say we have enough. I think we need a lot more capital. We need Nigerian capital. I also do not agree that Nigerians are putting enough capital into this market. When we study investments in Africa, I am looking for Nigerian entrepreneurs. We're looking for Nigerian investors. Most of the capital is coming from the US and China. All right. So, again, I stand to be corrected. So we need to put our money where our mouth is. Entrepreneurs and, people that are controlling the capital market in this space. We need to invest in the future, because if we don't, what is going to happen is going to be similar to what we're then seeing going on in the US and China. These fintechs, startups, 20 years down the line, they have a tendency, the ones that succeed, they have a tendency to become systemic. And then we start saying, well, these guys are not out of Nigeria. But you see, when they start, you have to have a skin in the game. Because when they scale, their valuation is out of this world. And therefore, it's very difficult for you to take a stake in them. So we need to have those conversations. I think that we need to invest more. We need to see more from our investment community in our fintechs and at large in our tech companies.
Thank you, Boye. I'll come back to you on the interesting points you have raised. Deji, I'm back to you.
If I add something to what Boye said, just to reiterate again.
Can we have the noise level muted? Adedeji, please.
Okay.
Tell me your experience. What has been the institutional responses from banks since you started this journey of open banking?
Okay.
What has been the journey? Are they supportive?
Okay. Thank you so much for that, Shadi. But before I answer that question, please, I'll need to actually also kind of support Boye's answer, which is the fact that we don't have enough tech companies in Nigeria, right? He mentioned Israel. In Israel, it's about almost a startup for almost a 200 people, right? In Nigeria today, if you look at us, we are 200 million people, right? So you are looking at about 1 million startups in different climes. And the foundation of every single country is built on entrepreneurs, right? All the big companies you hear about, right? They all started from somewhere. Now, startup, building things, right, at the small level has very high mortality rates. We are sure of that. Only one out of every company that started, right, end up being successful. So if it means that if you want 1,000 successful companies, you have to be ready to bury about 99,000, right? And is a law. When these companies are dying, they are not dying because they are not good enough. They are dying and creating knowledge and methods that everybody can depend on to create the next successful company. So I just want to put it out there. And the truth is, recently we keep hearing of Calendly raising money. We keep hearing of companies, African companies doing very well. And then you ask yourself, all this value being created, guess what? Most of the money is going to Silicon Valley, because when these small companies come around and they show up, the Nigerian investors are too scared to invest in them. The Nigerian investors think they are too many. They don't see the value of what they're doing. But when we now hear of another becoming maybe a unicorn, a good exit, everybody's wondering, oh, how did I miss out on that? The only way not to miss out on that is to invest in the ones that are available right now. So back to how we've been engaging with the banks. In all sincerity, I've spoken to every bank, and every bank seems to be very excited. But the only problem, which is also the problem that affects most banks, is execution. How to translate those excitement into actionable steps becomes a problem. Like practically every single bank. Of course, we've spoken to your bank as well, and that's where we are. But we haven't worked in banking well or worked in large organizations. I also understand that larger organizations a lot of times find it a little bit difficult to move as quickly as is required when innovation is coming, but it's a challenge that everybody will have to deal with. But today, I've not seen a single bank in Nigeria that is not excited about open banking.
Great. So that's some good news. Maybe what we need to look at both in challenging Nigerian investors for not copying their counterparts in Silicon Valley in investing in the fintechs. Are you not bothered about the trust level? How many fintechs in Nigeria have survived the first 5 years? We all know the global statistics. While we may not have witnessed the proliferation of fintechs community, I mean, the typical Nigeria will want to see costs and benefits in all of this. And I want to throw it open to the three of you. Don't you think the approach of the bank partnership with fintech, the collaborative partnership, will get us there faster? That's my first question. My second question is also to you, Deji. Is there a similarity between open banking and marketplace banking? Did you quickly answer that before I allow someone else to speak to the approach on collaborative partnership from the banks? Because that's what we have running currently. Okay, most banks share their APIs, work with fintechs with APIs for some of the digital innovation that we have seen. And the height of it has been in the last 2 years. But Deji, please give me an answer on similarity between open banking and marketplace banking.
Open banking is not like marketplace banking. Open banking is about standardization. So let me make it clear to make it easy for you. You drive a car, right? You notice that your tire has gone flat and you want to buy a new tire. What does your driver check? He checks the code on the tire that says maybe it's rim 17, 235, whatever. Those codes, it can go into the market and buy any tire and meet those things, and your car will drive perfectly. That is a standard. Now, today, if you have a debit, you notice that your debit card looks the same. There's an ISO standard globally that defines how cards should operate, how thick they should be, how long they should be. They don't affect the colors. You could paint them any color you wish, but they should have the same physical sizes. Now, that is like open banking. It means that the API from First Bank will work exactly like the API from Zenith Bank. Will work exactly like the same API from UBA. So it means that if a bank, if a fintech or anyone has worked with an API from Zenith Bank before, when they come to First Bank and you say, I'm granting you access, you don't even need to teach them how your APIs work. It will work exactly the same. That is what makes it open. So the fact that it's an API does not make it open banking. It's got to be the same across the industry for it to be an open standard.
Thank you. So, so the other question, I need a volunteer in the house between Boye and Farah.
All right. Okay, I can make a comment for Lashade. I think on the collaboration is certainly the way to go. I think that what we're seeing, the collabos that we're seeing between banks and fintechs, and deepening those collaborations is certainly the way to go. There is the question around if collaborations will resolve the issue of returns on fintech investments. And I'd like to, answer that question in two ways. If you do not put capital into these fintechs, you will not be part of enjoying the returns. All right. So when a bank does a collabo with a fintech, they can have shared revenue on that product or service. But obviously, they are not shareholders of the fintech in the model that we have today in Nigeria. All right. And if we see the trajectory of this, where this is going, we think some of these fintechs will scale. I think it is important from a regulator perspective to take a look at the regulation and how to enable banks to make more investments in fintechs. We're seeing that banks are exploring this through the holdco model. People are looking at, if I have a holdco, can I get capital into the holding company and be able to do more investments in fintechs and those type of things. But again, we've seen countries like China, where the banks the regulator is encouraging the banks to actually look at dedicating a percentage of their profits to making investments in innovation and in fintechs, all right? So for us, again, those are things we need to look at the nuances around this. Because like I said earlier, I particularly don't think that the model that we have today in the banking industry can take us into the future. The model has brought us this far, but the regulator needs to look at that model and, again, do more enablement, allow the banks, more latitude, all right? They're constraints today, more latitude, and in the way that even they can make those investments. So these are not short-term things, because you see, the regulator is always, to protect depositors and so on and so forth. And, you don't want NPLs to hit the roof. But again, this cannot be short-term things. It's a long-term play. And putting the mechanisms in place for the banks to be able to make those long-term plays, whether they do it by collaboration or by investments, both. And we're seeing countries do this. By the way, when you refer to who's creating the leading fintechs, you cannot ignore the Chinese, all right? If you go and look at some of the, like Alibaba is probably the largest fintech in the world now. I mean, Ant Financial, which is a subsidiary of Alibaba. The last I had, they're valued at almost $100 billion. So we have to look at these models. What did the regulator do, all right, to help in creating these models? How did they enable it? And I think that's the conversation we need to have, and also do it in a way that protects, depositors, and it doesn't expose the banking industry.
Thank you. So my last question will be to Farah. Farah, do you think it gives you an undue advantage over the banks, which own and sits more consumer data than you do in your business?
At the advantage, I don't think so. I think that, you have, without the bank, we don't have, access to that data. The customer can't grant access to that data. So I don't think there's a particular advantage that what Boye was talking about in terms of collaboration, how that is a good thing. I think it just opens up more opportunity for that type of collaboration between banks and fintechs to ultimately understand that at the end of the day, it's the customer that they're providing that value to. At the end of the day, it's the customer that they're, providing that that personalized service, or what that is getting that value. So I don't think that we have an undue advantage. I think at the end of the day, what we're just doing is trying to open up that dialogue, open up that space for that type of collaboration on a large scale.
Thank you. It's been an interesting session, and it looks like we just started, but our time is nearly up. So I'll just take one minute, final comments, and I will start with Farah, the lady in the house. They say ladies first. Thank you so much, everyone. It's been a very engaging conversation. We'll continue. I know there's a panel too that will take it further. So Farah, your final comments to the participants and the house.
Just thank you very much for having me. It was a pleasure being here, and I just hope for more collaboration between everyone here and just in the industry at large. Thank you,
Boye.
Thank you, Folashade. I think 2 comments for me. I think it's important over the next year or thereabouts for the regulator to put out regulation around open banking in Nigeria. It's really going to be important if you are looking at the transformation agenda, the 2030. How do we, break this challenge of financial inclusion? How do we attract capital? How do we continue to lead on the continent from a financial service perspective? I think it's a pillar, it's one of the anchors, and I'll say the regulator. We will be looking to the regulator, particularly the CBN, to lead this conversation. At the minimum, we should have clear guidelines on standardization, at the minimum. And we should have timelines, we should have benchmarks in coming up with this, what's been done in Singapore, what's been done in the UK, what's been done in Europe, the markets that we can look at. So for me, very concrete sort of recommendation that I think. The other thing we haven't talked too much about for me would be around trust and cybersecurity. As we become more open, we need clarity, and we need a lot more collaboration with the stakeholders to ensure we're building a system that is resilient. All right, because the more open you are, obviously, the more exposed you are. And we know that the threat landscape, the threat actors are changing, they're escalating their game. If you look at where digital is going, you can bring a country to its knees by shutting down some of this national critical infrastructure. All right, if you take, for instance, NIBS, if you take InterSwitch in Nigeria, these are national critical infrastructure. So, we need to have, again, a very systemic view of that risk, and ensure that the question of trust and cybersecurity is something that we're looking at holistically in the banking industry. I think also as a country from a national security perspective. Thank you for having me, Folasha.
Thank you, Boye. Adedeji, your final comment, please.
Thank you. Folasha, I want to thank you so much for bringing us together and asking very deep questions that's making us to take place. The one thing I just want us to know when it comes to open banking is, for us, I see open banking from the good that it's going to do. I actually don't see it from the fancy fintech stuff. I don't see it from transactions or bragging on Twitter. I see it as about creating a platform or removing friction that allows the less fortunate Nigerians to actually have a good life. If we are, not all of us can become president, not all of us can be in politics, not all of us will be as rich as Dangote or Bill Gates. But by putting technology in place, whether it's going to be standard, whether it's going to remove friction, we can allow millions and millions of vulnerable Nigerians to have access to credit, have access to financial services, and it actually make a whole lot of difference between living a good life and living a bad life. If you think of those young mothers with young kids who doesn't have control over our finances, but having access to credit can allow us to have a small trade, send our kids to school, we are actually creating a better future for young people. In the last 20 years, about 100 million Nigerians have been born since the GSM was brought to Nigeria, right? Now, if you look at the GSM, I know we don't like most of them because they take our data, take our money, but they've gone beyond where banks don't want to go. They've gone literally every single Nigerians have phones. So if they could do it, we could also extend services and credit to everybody. We could extend ability to save to everybody. We could extend ability to have bank account to everyone. When we do this, we help people. And when people are helped and they have future and they have something they look forward to, even the crime will reduce. Tax will come to government, and hopefully Nigeria will be a better place. A lot of time doesn't mean that government has to change. It could be little things like this that could change the whole country. That for us is the driving process at open banking. Thank you.
Thank you so very much, our esteemed panelists. My final comments will touch on what Boye had briefly mentioned. Cybersecurity is very key. And in drafting the open banking policy, the regulator as well need to look at it holistically. Nigeria has done well. During the pandemic, while global cybercrime went up, Nigeria actually had a very, very low, if not zero. And that's thanks to the resilience of the information security leaders across all the financial institutions. You know what the implication will be for what we have achieved as a country, as an economy, if we are hit at all. So kudos to that. But in drafting that policy as well, that needs to be also be taken into serious consideration. In addition to that aspect, we must also know that awareness is very key. What is still missing, the missing gap, the underserved, the underbanked, and the financially included is still education. No matter how much we have the open banking policy and the government is either bullying the banks or encouraging them or directing them, if we don't close that financial inclusion, awareness, literacy, and all of that, jointly as stakeholders, we might just be hallucinating about open banking benefits. But thank you, it has been an interesting section. We thank you for joining us, and to our participants, thank you for being part of this. I will now hand over to Frank Eleanya for the panel 2. Thanks, everyone. Over from this end.
Thank you. Cheers. Bye.
Bye.
Yes, hello. Thank you, everyone, for a very insightful panel session. I've learned a lot, and I'm sure that our audience have also learned a lot. And moving on, we have our next speaker. That's Niyi Toluwa Logbe. He's the Chief Executive Officer of eTransact International PLC. Niyi is a highly accomplished, dynamic, and results-oriented fintech professional with solid credentials and a proven track record in formulating and implementing operational and financial strategies, identifying investment opportunities, structuring and negotiating multi-party transactions, establishing best practice financial systems, structures, and processes, as well as building high-performance-driven organizations. His over 22-year-old career spans financial technology, investment banking, corporate accounting, corporate finance, equity investment advisory, and research, providing qualitative and quantitative investment advisory and research to institutional investors. He gathered his experience in global institutions, including JP Morgan Securities Investment Bank, Citigroup, and Credit Suisse First Boston's Investment Bank, all in New York City, as well as PricewaterhouseCoopers, PwC. Niyi has provided advisory initiatives in Fortune 500 companies on mergers and acquisition, as well as equity and debt capital structuring. Some of the key companies he advised include General Electric, United Technologies, Danaher, Northrop Grumman, Boeing, Dow Chemical, Sherwin Williams, Apollo Capital, Bain Capital, Georgia Gulf Corporation, and a host of others. He has a first degree in accounting and an MBA from the prestigious University of Virginia's Darden Graduate School of Business. He graduated as a Dean's Merit Scholar and was appointed as a second-year investment banking coach for the first-year students preparing for internships in investment banking. He was elected president of the Darden African Business Organization, DABO. He was a part of the Global Business Exchange Program at IESE Business School as a student of the University of Virginia. Nee is an ardent sports lover and a fan of Arsenal Football Club. So without further ado, we'll be listening to Nee and give us his 15-minute speech. Thank you. Over to you, Nee. Over to you, Nee.
Yeah, fantastic. Thanks a lot, Frank. I wasn't expecting you to throw the Arsenal jab after yesterday night's game, but it is what it is. We move on. This is open banking territory.
Yeah.
So I've been listening in to the extremely rich, wealthy discourse that happened about an hour ago on open banking, talking to people I know very well, listening to people I know very well, analyze their thoughts around open banking, which I found very interesting. I'm not sure there's much else to say on this topic, but I just would like to share my views from a fintech perspective. You know, as the CEO of one of the leading fintechs in the industry, regarding open banking, we're part of that association as well, and we believe that it is a significant initiative that must happen, because I look at open banking from the perspective of I try to relate it to a lot had been said on telecoms. You know, if you look at a couple of years ago, when just to digress a bit, when telcos started the sale and lease back of their towers across the continent and across the country, you found out that the leading telcos that had more presence across the regions in which they operated obviously had a lot more towers, because they had made the investments over time to build these towers and expand their connectivity and their network presence into these areas. And then when the issue of sale and leaseback came, where tower acquisition companies would approach this telcos, there was usually that resistance. And I was involved in some of these discussions during my former life in advisory. That's where I gathered that one of the challenges the bigger telcos had was the fact that they had made the investments and they had built the customer base because of their presence, their infrastructure presence. So why would they want to give that opportunity to smaller telcos that will be clients of these tower companies by putting their own passive equipment on the towers? So bigger telcos did not want to facilitate the growth of the smaller telcos. That's because they were taking an independent company view, corporate view. But if they are taken, some of them now eventually took an industry view of growing that space and creating significant activity across the telco, improving network infrastructure across all the telcos, which is what is now facilitating, albeit gradually, the growth and the confidence we're seeing, you know, in electronic and digital transactions, because a lot of what we do sits on this infrastructure, the bandwidth, the voice data, the SMS banking, and all of the stuff we're trying to build on. Internet, it sits on this infrastructure, and we've experienced a lot of growth in there. So if you bring that to what we're discussing around open banking, what is the real challenge from my perspective? It's control. If you look at the banks today, I liken them to be the telcos of those days. The banks have invested in infrastructure. They have spent money to build their customer base. Who owns these customers? It's the banks. The banks have built the customers. But who has control? Should the bank have control, or should the customer who actually owns their data have control? Let's separate this. I know it was mentioned in the earlier panel. Yes, the customer owns the data, but the banks own the access. That's where the issue is. If a bank is going to open up and give a fintech access to its customers, what is the bank giving away? which is why I liked the direction of collaboration that was also mentioned in the last panel. What we look at is how banks sit on these assets. The customer access, the infrastructure the banks have put in place is actually an asset to the banks. What banks need to figure out, and I think one of the things I'll talk about, because I have a 6-page slide I'm going to jump into shortly. One of the things we need to think about is how can the banks monetize these assets, which is customer access, which is why I really like the direction of collaboration. What business models can we put in place to facilitate access to customer data warehoused by the banks, but belonging to the customer? So that leads into my presentation. Can you allow me to share my screen? Okay.
Yes, you can go ahead. Okay.
All right, fantastic. Can you see? Can you all see my? Can you see my presentation?
Yes, we can.
All right, good stuff. So, what we're looking at now is if you have wondered what exactly open banking will do for the Nigerian banking system, you're not alone. We think about this every day. A lot of the fintech players have this as well. Those that are joining the association, those that created the association, the trustees of the association, everyone thinks about this every day. And we had referring back to the panel earlier, we had a very rich conversation as to how this can help facilitate even GDP growth. And we emphasized on how telcos over time contributed 0% to GDP. Now they're contributing 11%, and that's growing. And the availability of telecom and the availability of internet bandwidth is facilitating the growth of digital payments, whether we see it or we like it or not. And that is also contributing immensely to growth in that sector. However, just like I said, there are a couple of mission critical questions that needs to be answered. How do we get banks to jump on board this open banking initiative? We focus a lot on banks because banks have already invested in the infrastructure, recruited the customers, they've mined this data, and they own the infrastructure that fintech players will need to access customer data. How many times has a viable solution been sidelined because certain banks are a key dependency or because they operate a closed system and will not open it up? Because they don't have to. It's their customer base, it's their customers. They want to keep control. They feel that opening these up will take control away from them. Do they have a point? Somewhat, they do, because they have actually made the investment to build up their customer base. They own these customers, but what I think they own is the customer access to the customers on their platform, and not necessarily the customer. The customer owns his own data. Should customers give their part as banks simply for the good of innovation? Innovation is the talk of the day. Several fintechs are creating crazy, mind-blowing solutions today that can give you access to one kind of financial service or a kind of financial product, from your home, from your bed, from wherever you are, without even taking a step out. The next question is, how do we make an open banking world work for banks as much as it does for innovators? Innovators will always innovate. Innovators will raise money, build solutions, build products, and look for customers. The banking system and some of the other more established fintechs have already built their customer base. Open banking would allow innovation and new fintechs that are building new ideas, new solutions to access and sell and push their products into the financial services ecosystem, which is what would drive significant growth in that industry. Some of it we've experienced so far with the new solutions we've seen deployed in the ecosystem. This leads me to the point on collaboration. I said earlier in my opening remarks that banks need to figure out how to monetize the infrastructure they have built for customer access. So for me to have a uniform position across the banking system, focusing on the standards we had discussed earlier, on as a key driver for open banking accessibility. Once that is identified, and there's an agreement to that, then you will see that once the business model is clear to banks on how fintechs needing access to customer base want to mine and access that data, and the business model justifies a return for the banks, I think we can make some more increased and pronounced success with that. There's also the issue of how do we craft such a methodology into a framework that all stakeholders can commit to. The issue of regulation came up. The initiative, the sandbox initiative that has recently come up, and a regulatory framework for that. That's positive. That's positive in that direction, creating that opportunity for new ideas to go into this on this platform, and all the necessary stakeholders can test this and get the necessary comfort required to ensure that the issues of cybersecurity, the issue of control, and the issue of innovation are well balanced, very well balanced. I think these are questions that need to be answered, and once they are answered, we'll see some incremental progress in the adoption of the open banking initiative across this region and the terrain. Taking another look at the progress on open banking thus far in the country. More and more fintechs are developing solutions. They're raising money. Over $300 million was raised in 2018. I think there was some slowdown because of the pandemic last year, but there was still significant money coming into that space. And these fintechs are building the application. They're building the infrastructure on the application programming interface, using the application programming interface based infrastructure, the API that was largely discussed at the previous panel. Banks are also playing in these games. Telcos are also playing in this game. Everybody is building solutions, and those solutions are API focused. So what that means is that the standard we're promoting, that uniform standard we're promoting, that will drive open banking, is already operational, because everyone is moving and thinking in the same direction with the new innovative ways of building solutions today. Practically all solutions, all critical solutions are running on have API-based interfaces for people to plug in or extract value or drive data or speak to separate infrastructures across the financial services ecosystem. As mentioned, the most significant step taken by regulators is that creation of the regulatory sandbox by the CBN, and the inclusion of same as a licensing category in the latest licensing categorization guidelines by CBN has even made it clear the direction the regulator is moving. I think Deji mentioned in his presentation that he expects to see some form of pronouncement at some point this year. I think I'm on that plate as well. I think we're going to see certain things happen around open banking, because it will help the industry grow significantly. Why reinvent the wheel? The owners of the wheel just need to understand better how to monetize what they have created, and let this evolve into a business model that will drive the collaboration we had discussed earlier. At our company, eTransact, we had defined creating a trust environment for the payments ecosystem to thrive as an innovation focus. And we saw a world of open banking early enough and started to prepare for it. We're a member of the Open Banking Association, and this has led to the creation of one of our flagship products, Bankit, which is a payment gateway that will be available to innovators to enable their user access funds across all their different bank accounts, via single API integration, a single view for multiple accounts. Today we have a number of banks on board with some others looking to integrate. And what we've tried to do is to help the banks understand how they can monetize that access. And once that pathway is created, the banks see the value in it, it facilitates transaction, and they can make a return on the investments they've made in previous years on creating access to their customer base. And all of this is possible because at eTransact, we have a trusted network of banks, and we're opening these up for further and beyond the closed switching networks, which we need to establish a universal trust network with mutually beneficial business models. Trust remains the critical platform and the critical pillar for open banking to work. Trust among fintechs, trust among banks, and trust with the regulator. In concluding, a universal trust network where all key stakeholders, financial service institutions, banks, fintechs, switches, PSSPs, the central bank, the regulator, have structured visibility to all transactions, and can bank on the fact that all the necessary security systems and protocols have been followed, would further drive the general acceptance and the progress we'll make in with the open banking framework in order for it to exist into the long future. I think that's where I will stop now. A lot has already been said with the very rich discuss with the earlier panel, and I just wanted to contribute a little bit with what we know and what we understand and what we have experienced as we make our open banking journey. Thank you very much for listening. Cheers.
All right, thank you very much for that very insightful discussion that you just raised. There's several points that you have raised there, and we'll be looking forward to asking the next panel some of those questions as we proceed. The next panel that we're going to have, we'll be looking at the topic stubborn adoption, keys to lifting barriers to user growth of third-party provider apps. And with me on that panel are is Bolabo Awelewa, CSIM, the country manager of a VCISO, InfoPrive. Yeah, I hope I pronounced that very well. Okay, so Bolabo is a business information systems and enterprise security architect with over a decade experience in the design, development, and management of secure information systems and enterprise infrastructure. He's a technology strategist and business executive with hands-on expertise in the design and delivery of high-performance information technology and business process improvement solutions to address complex business problems. He's currently the country manager of VCISO at InfoPrive, a cybersecurity company with extensive expertise in security integration, advisory, and also a managed security service provider. Next, we have Ogbe Adeoye. Ogbe Adeoye is the founder OnePipe and also a trustee Open Technology Foundation. Ogbe Adeoye has spent 16 years in the technology and payments ecosystem in various capacities, including engineering, leading high-performance product teams, and deal sourcing for mergers and acquisition activities. Most notable is his work helping to birth and grow QuickTeller and lending services while at InterSwitch. Next, we have John Oke. John Oke is the CEO of Wallet Africa. John started building software for Wema Bank in Nigeria at the age of 18 as a junior engineer. From there, he started a dev shop to build software for banks and investors across the country. Alongside ex-classmates from school, he started ngfees.com, which was like Flipboard for Nigeria at the time. To get more startup experience, he joined Hotels.ng, then later SureGives to help scale the company's technology infrastructure to serve 2 more countries, as well as to help build their voucher-based products, SureRemit and SureCredit. Next, we have Elsa Mussolini. Elsa Mussolini is General Manager, Commercials, Mobile Financial Services, MTN Nigeria. Elsa joined MTN Nigeria 15 years ago from MTN Uganda, where she also served as the General Manager, Mobile Financial Services. She brings to bear over 12 years management experience in mobile money, marketing, telecoms, and business consulting, from working with diverse organizations such as the Orange, Cameroon, Orange, CR, and McKinsey and Company. And then I think that's about it. So I hope we are all here. Okay, yeah, so I beg your pardon, there's just one more person I need to mention, even though he's not gonna be joining us. Let's just give him the honor. That's Showemimo Abiodun Alex. He's a founder and CEO of Capital Metric Q. He's a multi-award-winning computer programmer, financial technologist, diplomat, internet entrepreneur, domain broker, computer media applications, and online reputation management mogul. He is a founder, CEO, iNet Telecommunications, Capital Metric Q, Swift Bank, and Infometric Q Network. So having dealt with all of that, we are going to move straight in. My questions are going to be directed just to about anyone. I hope you're ready for me, but I promise it's going to be a very rich discussion. So I want to start with Bolabo Awelewa, and the question is, what could go wrong in terms of security and privacy of consumers' data in an open banking era? And how do we prevent these from the beginning? Okay, if you're, Bolabo, if you're there. I think you're on mute. Okay.
Okay, yeah. Thank you, Frank, for having me. So it's a privilege to be here, to be able to speak, speak with colleagues and be able to share and exchange ideas. Okay, so to your question, like what could go wrong? So what I enjoy most about my job, or what drives me, is the idea is to ensure controls are in place, or there are processes in place to drive innovation. So from a security point of view, there used to be that traditional mindset of security being maybe a roadblock or limiting innovation. But there's a new group of us coming through now, presenting security as an enabler. And so the idea is we would encourage continuous innovation, continuous transformation, and also ensure it's done in a secure manner. So what could go wrong? It's customer data, loss of customer data, exposure of customer data, privacy-related issues. And what's the worst that can happen? So first, let's talk about the traditional mindset. The reason why the traditional mindset is still running, or you have some, say, financial institutions or organizations still running closed loop. So from an API perspective, API management has existed for a while, but it's been a closed loop. So as a third party, you need data, or you need to provide a service or product. Is this private access given to you through a virtual private network, and it's connected to you, and the services, data is provided to you. And then if another third party comes through, another virtual private network is set up, and the data is provided to you, and you can provide the service. Multiple instances, we create a sprawl of connections to multiple third parties, and the administrator gets overwhelmed. And at the point where there's an exposure and an issue, it even takes you a while to be able to investigate and track where there's a leakage. So, but what the API management and new technologies are providing today is providing that one. Borrow the company name of one of my colleagues. Use that one pipe to give you that access to multiple third-party connections. And what is behind the pipe would be an API security layer. So aside the typical perimeter security controls that you have, which is you have firewalls, you have web application firewalls, you have anti-DDoS, you have dynamic security assessment solutions. There's this API security layer that, irrespective of traffic that has been approved to pass through your web application firewall, there's still some form of analysis that is done on API data usage. There will be some risk rating that will be followed to track how the data is used, where it's used, the interaction between the two entities, which is the users and the endpoints. And then there will be some validation process that will pass through that, yes, it's a valid request, and the call will pass through, and then the customer gets value. So this is what we've been preaching. So we have organizations that actually run that today. And a very important part of opening up APIs is just continuous monitoring, continuous assessment, also from the start. To answer your second question, which is what are the things that can be done? Building from the scratch, aligning with best practices. So for those into DevOps, maybe DevSecOps, for those still building solutions the traditional way, developing your APIs with security in mind. So most times security is always an afterthought. So you build the API, then you put a control in place. So today what we are saying is ensure you're building with security in mind at the point when you're building. So your API documentation should show security controls, the encryption for data flow, to minimize loss of data or to convoluted data flow. So have these controls in place, which is largely, so for example, for most financial institutions, the perimeter security controls exist today. The connections, the secure connection exists, but after the connection, what happens? That activity, that interaction between the user and the endpoints is what you need to be able to gain visibility into controls in place, be able to control and manage the traffic of API calls and the response to API calls.
Okay, just to follow up on that, you're a security person. Looking at the security environment in terms of cyber laws and cyber acts that Nigeria currently has in its systems, do you think that we are ripe for an open banking system?
So I think we are very right. So what has happened, or what's happening currently, is that we have a lot of organizations and entities that are invested largely in cybersecurity programs, security controls, even security awareness programs, even to the user level. But what we don't have is a centralized, structured one that can be driven, leveraging like an open banking framework. So by the time the open banking framework is approved and all entities come together to be able to work together to maintain a standard, open up the controls they have, and this will be aligned with. So largely for some environments, the only part they need to impute will be API security largely. So a lot of them have, so some have established, they've identified and established their API economy, so there's API management in place in the organization. Some, the API gateways, there are some controls that have been put in place for authentication and authorization, but there's still that layer for API security where you need to gain visibility into API transactions and be able to track API activities.
Okay, moving on to Elsa. The telco like yours, MTN has invested a lot in infrastructure, building infrastructure in the telecommunications sector. You even have infrastructure for even mobile money. You have just about what is needed. But I'm still going to ask you, do you think we have the infrastructure to power an efficient open banking system?
Okay, definitely, I think yes, we do, and I think we are not. We have it, but we are not leveraging it enough. So I understand the context like this. So look, I think we say it in the first panel. Here is Nigeria, a country where you have $2 million of investment into fintech. It is actually the country in the continent with a higher number of tech hubs. There is more tech hubs than even South Africa and Nigeria. So we have that vibrant developer fintech ecosystem that is there, that is waiting. We have the telco. So I heard in the first panel, we don't like the telco, but I think we need to love them, because when you look at this, we are absolutely covering the unbanked, right? Most of the unbanked, if not all of them, at minimum have a feature phone. So you have a country where everyone at minimum has a phone, and when you look at MTN network, at minimum, all MTN are equipped for 3G minimum, as we are preparing for more. So, and the third element of the context is, you still have a banking environment that is still working on the closed loop, and where actually, like, with a lot of closed loop technology, but also from a regulatory perspective that has not allowed the big telco to fully enter the game as what you can see in the other country through mobile money setup. So all of that those are three, I think, important elements of setup that make me believe that we are not in position to fully leverage the technology asset and like business asset that we have in the country, and that open banking is one of the key things that we really need to make happen in the country. So what needs to happen? I think, and it was said a bit in the first panel, I think we need less fear, right? Less fear, more collaboration. Let's have the telco fully play the role, right? Yes, we can do more. We do already super agent. We can probably do much more, and actually like enabling the API that will actually enable any fintech or bank to talk to those that we call like the bank underserved people. So I think we definitely need to discuss about standard, about the API. From a GSM perspective, we have that GSM association. We are trying to standardize GSM API. But because now, as telco, we enter in the fintech, we would love to also participate to the discussion about how to standardize bank API. Because the result of it is to make it easy for the developers to actually use what will make available for them. So, and I think like all of this together, I think we can build that collaboration, that enabling environment for that fintech community of developers and so on, and make emerge like big tech made in Nigeria that will be able to cover the continent, if not more. So that's what I think. Yes, we have the tech infrastructure, we have the developer ecosystem, but we have not fully enabled from understanding regulatory perspective, the open banking API, but also probably the telco entering the game and playing the role as a fintech.
Oh, okay, so again, let me follow up on that. The earlier panel, we had that conversation talking about banks being ready to welcome competition from fintech firms. And do you think that open banking, whenever it finally becomes mainstream, is an indication that the regulator is open to more competition that now includes telcos to come into it? We heard DG in the first panel say that before the end of the year, we're going to have, it's likely we're going to have an open banking regulation. Do you think that this is an indication that the regulator is open to more competition from non-banking institutions? We have seen PSB being given to two telcos, but not to all the telcos. And then we're still asking why was it not given to every other telco? So do you think this will raise that discussion for everyone?
Yes, absolutely. I think the regulator is ready, right? I think the regulator, like when they issued the PSB recently, PSSP, PTSD, the way it has been recategorized, the discussion that we have today about open banking and the fact that we start talking about this, I think is not from a regulatory perspective, there is a clear willingness to see how we can make it happen, and probably a good opportunity for MTN, Airtel, and the other telco in the country, even if they already have PSB, to do more. I strongly believe that we are a key player to actually extend the pie and help from a distribution perspective to reach the people who don't have yet access to bank services, but even more, maybe not fully yet access to a smartphone, right? As telco, we have solutions that can address even people who don't have smartphone. So yes, I think my point is really let us enter this game with you. Less fear, more collaboration.
Okay. To John, okay. What kind of regulation do you think we need for a level playing field for third-party provider apps and traditional financial institutions? We, again, looking back at the conversation between banks allowing fintech firms to come on their APIs or maybe to leverage the data they already been accumulating over the years. What kind of regulation do you think will make this to be available?
So I think it's probably going to mirror the curriculum that exists today. So which is the licensed players gets access. Then for third-party players that do not have access, they work under a bank partnership or something similar. So I think that's something that you're going to see happen as more and more fintechs continue to operate in open banking. You're going to see something around licensed guys as well as providers who operate under the share partnership model.
Okay, looking at this year, some banks are going to become, are going to get their holdco licenses, and GT Bank and Access Bank are some of the banks who are looking at the payments landscape and looking at fintech, setting up fintech firms and all of that. The question is, do you see a potential bias when open banking become mainstream? I mean, if an Access Bank has Access Pay Limited and GT Bank has Quick Teller, has other fintech firms and all that, isn't there a ground for bias when open banking goes mainstream?
Well, thanks, Frank. Those are two separate things. So the first one is open banking on its own going live from banks. Then the second one is now that banks are able to operate as holdcos, would there be offers for them to buy fintechs? So the answer is always yes, right? There's always, these are industries that have seen acquisition happen over the years between local players, we've seen mergers. Now we are seeing foreign companies also take part in the process. So the answer is always yes. The question now is how open are the management of the banks? There's this mentality of buy versus build. So how open are they to like saying, look, these guys have probably figured out the product, they figured out how to talk to the customers. So instead of build, why not just like buy? Then of course there's going to be like discussions around valuations, because of course some of the local companies have had to raise capital outside, significantly making them quite priced at a different expectation compared to based on their potential future earnings, compared to what an acquirer might be willing to pay. So there's a lot of moving parts that needs to be figured out. But Frank, to answer your question, yes, there's a market. Is open banking going to play in that space? It's up to the banks. I think the guys running it are quite powerful people. So it's up to the banks to say, look, let's join and let's see what's going on.
Let me ask you the question they asked in the first panel, which is, do you think the bank will buy into open banking 100%?
I think so. I think the guys, like, look, if you look at everybody on the open banking, quite connected. Lots of them are ex-bankers. So we are able to leverage some extent on those personal relationships to move things. Then you just want to see how much value has been created over the past few years by banks working with fintechs. So everybody knows this is a direction to go, right? So the handwriting is on the wall, so to speak.
Okay. So my next question goes to Okwe. You played a big part in the development of Quick Teller at InterSwitch before setting out to launch OnePipe. What lessons did you take from that in creating the customer offering at OnePipe? And what are the lessons in terms of collaboration here for open bank proponents?
Thank you very much for having me. I think I'll dwell less on OnePipe and stay on topic as per open banking in general. So I'll relate some of the work we're doing at Open Banking Nigeria with maybe my history working on Quick Teller while I was in employment. One of the things we noticed in those early days was that we were basically breaking barriers and hitting our heads on walls while we were trying to build Quick Teller. We had to go to telcos and say we need an API that works like so that your airtime can be sold on ATMs. And the telco gives you some API, you have to do it. We go to a cable TV company, we need an API that works like so. So it was like continuously changing integrations as you go company to company. It's a painful experience for any service provider trying to launch it. So if you're trying to launch a Quick Teller, for example, one place on many channels where you can do any transaction of sorts. They're going to integrate to so many different people with so many different APIs, and it's a painful journey, a very, very painful journey. And it was one of the driving forces that made us think that an open banking regime in the country will be helpful for people that are trying to do things like that next time. Now, imagine that you went to a telco or those banks, and you know on the first day of talking to those banks that there's an API that looks like so, like so, like so. You won't even need to go through all the red tape, 2 years of integration just to onboard that customer or that channel, right? It will be a much faster experience. You can focus your conversation with that bank strictly on the commercials. How do we share this money? What's in it for you? What's in it for me? Because integration is out of the window, right? And that's what open banking promises if it becomes a thing. In fact, let me take that back. It's not if, it's a question of when now, when it becomes a thing. So ultimately, if I borrow from that experience while I worked at InterSwitch, it's that integration to both channels and service providers is a painful effort for both parties. The telco or the bank is not happy that we're spending 2 years doing a small project. We doing the project are also not happy because it just seems so hard. And if there was an open banking regime, 90% of that problem disappears because you know what you will meet when you talk to that bank or that telco, a standard specification that you can work with. I hope that sort of touches on.
Following up again, is what do you consider the biggest barrier? You have spoken to, as a trustee, I know you're part of the conversation with banks, with regulators, with even the general public who are eventually going to be at the receiving end of this open banking. What do you consider the biggest barrier to the adoption of open banking in Nigeria?
This will be my personal opinion now. I think my view is that the industry, especially the banking sector, has the typical history has shown where most of the bankers say, this is a very nice idea, but what does the regulator say? So we've not met a bank that has said open banking bad or open banking we don't want to do. Everybody's excited, but everyone seems to be afraid to take that first concrete step until they hear a clear regulatory bell saying, yeah, let's do it, and this is how we should do it. So I think the biggest barrier in my mind is that fear of being the first to take an action. I think that's the biggest barrier, where there are 20-something banks, all say this is great, all sign a willingness to participate documents, but say, oh, but what does CBN want us to do? When they tell us what we should do, then we roll out, right? But meanwhile, all the banks have APIs that are legacy. All the banks are doing multiple projects per time, with different vendors, using different APIs, and it's complex for everybody. And all of the banks are open to some arrangement to know that my API always looks like so, and I can therefore work with any vendor who brings a value proposition that I like. But I'm afraid to pull the trigger on that move because I don't know if my regulator will suddenly tell me, no, you are doing the wrong thing or you are doing the right thing. So my view, that the biggest hindrance is the fear of movement because you don't know what hammer will come on you.
Okay, the third question is, we've spoken about how open banking will affect businesses and affect banks and every other corporate entity in there. But let's focus a little bit on the consumers. We said that open banking will give them the right to say, as in to decide who uses their data for whatever purpose and all that. I just wanted to clarify the extent of that right. What is? Can I tell GT Bank or whoever bank give my data to say to wallet or to one pipe, and I expect them to immediately act on that instruction? To what extent is my right in an open banking system?
If you don't mind, I will deflect your question slightly and then expand what open banking could really be and say it's beyond just access to data, right? And it basically says that there's a standard that all banks conform to for most banking operations, including data access as a point of it. So how I move my money, there's a standard that governs that. How money comes into my account, maybe there's a standard that governs that. So what open banking is putting forward is that all banks agree to this standard. And it includes both data access and money movement and any other transactional activities the bank wants to make available. Now, to relate it to your question, it therefore suggests that if all banks have an interface to the technology world like that, it means that so many different value propositions can be built on top of the banks, right? A bank that is say, risk averse, for example, and cannot service a particular segment of customers, there will be that microfinance bank or that digital lender or that small time loan shark, pardon my French, who is willing to bite that risk, right? And is willing to partner with a bank to service that segment that the bank's risk appetite cannot carry, for example. And the same thing extends to insurance, to loans, to any financial service. Now, what this therefore does is that a consumer can then say, I like this product from this particular third party, but my data is locked in bank A or bank B. Their bank A or bank B, make that data available to human. That same consumer needs to be able to revoke the rights to say, I no longer want to allow third party X to access my data or move my money. I hereby revoke it. The bank will be the custodian of that, can be exposed to a third party and can be controlled by the consumer himself, with the bank acting as custodian, and it benefits everybody.
That will require a legal framework, so shouldn't it?
Correct. So if you look at the open banking proposal that we have put forward, that we believe even the regulator is actively looking at and all the banks are taking a look at, the specification covers so many things, including the actual interfaces of the APIs, the SODAT open banking specification that was put together by Open Banking Nigeria and our different member organizations. All banks are reviewing that today. So many fintechs are reviewing that today. The CBN is reviewing that as well. We believe that ultimately when an open banking regime comes out, it will not be very far from that specification, we think, that we have suggested. Of course, it will then get the refinement of experts like Bolabo, experts in the CBN, who will help us to make it a bit more as well as other.
Okay, thank you very much. So moving on to my final question for Bolabo. In terms of adoption obstacles, do you think there's sufficient public enlightenment on the security and safety of Made in Nigeria by Nigerians financial app and open banking solutions?
Okay, sorry, so what's the question? Do I think there's enough awareness?
Enough public enlightenment on the security and safety of Made in Nigeria by Nigerians financial apps and open banking solutions?
Okay, so I would say yes and no. Yes, in the sense that there are a lot of efforts being put in place to put awareness out there. So there are a lot of entities like there's the Niger SecForce, NSF, there's CyberSafe. Even the financial institutions are there putting out information with regards to how customers should manage their, credentials, their personal identifiable information, how they should manage transactional information. So it's out there. So, so I think they're doing enough. And I think even for the new year, for the new financial year, they even have budgets for security awareness per product, per service. It's not just the general awareness, it's for this particular product. So for example, for agency banking, there has to be some form of information. For open banking, when the framework is established, there would be requirements in the framework for compliance to some security standards, compliance to ensuring some specific security controls are in place. There will be compliance to in building your API documentation. There should be security input and considerations while developing the standard APIs for all organizations, for example. And so and that's on the back end. So for the users applying and using these particular services, there will be the requirements too would insist that every service provider, which is every third party, for example, should be able to communicate to all their intending users in the language they understand, on the security controls that are in place, and how they should operate or interface with their services in a very secure manner, because it's their duty and their responsibility to do that. And so I would say, yes, it's in place. I wouldn't say they are doing enough, but they are doing a lot. But when the regulation comes through, it will establish it and standardize it. Okay.
To Elsa, my final question is: PSBs are yet to make a splash. Many expected before they received the licenses. What could be the reason for the muted activity?
What could be the reason for the license not to be issued? I am not so sure I got it.
I mean, what could be the reason for we expected when telcos come in, a lot of activities, a lot of mobile money outlets springing up all over the country. But it's been over a month or 2 months, going to 2 months now, and what we are expecting is not so happening. What could be the reason?
Okay. So look, I think from a field perspective, we can see 9mobile, Glow preparing, but they don't have yet the full authorization to commercially launch, right? They have the license, but they have not yet notified CBN that they're ready to launch. So nobody has launched so far. Airtel and MTN don't have PSB license, and the two that are given it don't have yet the full. So I'm not surprised that we don't see too much. We're still at preparation stages. Even for Airtel and for Glow and 9mobile.
Okay. Thank you very much. Then my final question to Okwe: how do you make the? Can you give us a clarification? Say a difference between the recent sandbox framework that the CBN launched and the open banking. Is there some similarities? What are the similarities and what are the differences?
That's actually a very nice question. Even I was confused up until about 2 weeks ago when I got a policy expert to help me personally understand it. I think there's a mix-up. I think those two things are different dimensions of the same matter. They are not the same thing. The regulatory sandbox that was put forward is basically saying, dear regulator, I am a fintech. I want to launch a new service. I'm not sure what regulatory license type covers what I want to do, but I want to do some testing or some POC to even be sure that my product or my concept is viable. And I want to do that unencumbered by the pursuit of a license. Under that arrangement is saying that prior to asking for a license, you're telling the regulator that give me permission to run a 3 months, 6 months, 12 months pilot of sorts. This is how I will contain my activities during that pilot. In that period, what you're doing is that you're participating in the regulatory sandbox, right? Has nothing to do with open banking or open APIs per se. It could also therefore mean that anyone who is trying to operate some open APIs or open banking type of use cases may therefore say that since there's no regulatory guidance yet on an open API play, maybe such an entity should constrain themselves and say, dear regulator, I would like to be to participate in the regulatory sandbox. Here's what I'm trying to do. I would like to do this for 12 months. I'd like to do this for 6 months. And so basically, open APIs should not be mixed up with regulatory sandbox. Regulatory sandbox is just saying, I want to do some work. I don't want to be encumbered by chasing a license for 1 year before even knowing whether that work is tangible. So dear regulator, put me in a sandbox to run my experiment for a few months. When I'm clearer on what it means, the returns to the government in terms of financial inclusion and things like that, then I will come forward and say, I want X type of license or Y type of license, not to be mixed up with open APIs at all.
Okay. John, my final question. Abroad in the UK, the US, we have seen banks buy fintech. We're talking about Major, the last time that you spoke. We have seen banks buy fintech, and we have also we've seen a case where a fintech bought a bank. And we have also seen that banks participate in funding of the fintech firms abroad and all that. But here, it's not the case. So the question is it due to the willingness to sell? Okay, you talked about the misfit or something, or cultural misfit, regulatory competition restrictions, or plain disinterest? I think you're on mute. Okay, yes.
Yeah, I thought my mic was on. Yeah, it's fine. So that's a good question. So initially, I thought first it was regulatory. So up until a few months ago, banks could not invest in fintechs, nor acquire or do anything until like at least recent policy change. Then it's also that thing that I discussed earlier, build versus sell. So lots of the time, banks or big financial institutions think they can build some of these products by themselves. So asking them not to, so it's like a disinterest in that case. Then like the third one, the challenge you can see is lots of the time these startups are financed outside. So there's exit expectation compared to what a Nigerian operator might be willing to pay. So lots of these things, these are all factors that affect how much banks can actually play with acquiring or merging with fintechs. Then there's also the cultural one, which is fintechs have to adjust a lot just to fit into like the way banks currently operate.
Okay, thank you very much. So to round up, I'm going to give each one of you, say, a minute to just give us your last word. That's starting with Bulabo. Please give us your last word.
Okay, so first, it's been a privilege to be on here, and I would say I look forward to the coming together of this whole initiative, which is for open banking. Whether by regulation or by the ecosystem just agreeing to work together. So either or. So and also the most important bit is to ensure that we do things securely. We ensure the customer does not suffer from a drive for innovation. So so me and my colleagues and other entities be able to work together and ensure a safe and secure banking ecosystem.
Okay, next, John, over to you. Give us your last word.
Right. So I think there's lots of progress that's been made in the past couple of years already with banks and fintechs working together. So I'm excited for that, more of that happening. I am really excited again for perspectives changing in how banks view innovators. So there's a lot of money to be made, just like in competition, also in collaboration. So it depends on how much people are willing to change their perspectives on working with fintechs.
Okay, over to you.
Yeah, so I think for me, I believe that the world is expanding, and not everyone, none of the current incumbents, whether it's banks or larger switches, are able to provide for the country, particularly what we need in the area of financial services alone. A practical example would be the cost to serve a rural person, for example, by a bank is very high. Meanwhile, that rural person is a member of a cooperative, a trade group, a religious group that has direct access to him. If you find that cooperative willing to work with a bank to help them serve that guy, an open banking regime makes that possible. So my parting shot will be, if everyone is open to collaborating, if everyone enshrines that belief in openness in some sort of then we can see credit penetration, improving savings culture, etc. Because people are on the level to deliver and safe to sell.
Okay, Elsa. So I left you for last because you are working with MTN, and basically everything is going to ride on infrastructure that organizations like you provide. So what are we expecting in terms of infrastructure in this area?
So I'm going to talk as the GM for MTN Nigeria FinTech, right?
Yes.
So I think 2021 is exciting. Firstly, because we are actually moving to open API even for network API, right? Access USSD, SMS. So we're going to enable it in like a standard GSMA API framework that will be available for developers. But secondly, even as a fintech, so as MTN Nigeria, we have YDFS, which is our own fintech subsidiary. So even as a fintech, we are going to get to like open our API of agency banking. So my big objective is to actually have a couple of fintech that successfully use our agency banking API. They don't have to meet me. They connect on the developer portal. They get our API, and actually they can collect from that farmer cooperative. They know who has paid because the data of the GSM user is available. They know who has paid for that service that the fintech is available. And this is happening like very far in the far north with somebody who doesn't have a bank account, who doesn't have a smartphone. So that's even from a fintech API, 2021 is the year for Telco to start to progress and hopefully influence all what we are doing from fintech banking, and quickly also give positive example to go to open banking as well.
Thank you very much. Thank you everyone for being a part of this wonderful panel. It has been very, very enlightening. So without further ado, I will hand over to the MD of Business Day, Mr. Dr. Ogo Okiti, to give us the last words.
Thank you so very much, Frank, for moderating that session. It was very, very insightful, just as much as the first panel, and of course the fireside chat that you had with eTransat Managing Director. I mean, I've thoroughly enjoyed myself this afternoon, and I've enjoyed the engages that we've had here since we started this conference. Let me just reiterate, let me just mention 3 points that I take away from here. The first is that everyone agrees that the journey has started, and we know that it just needs to be accelerated. I think that is something that is a good start, because we all see that the journey has started, whether it's in relation to technology or some form of regulation, and that just needs to be accelerated. The second point is that regulation is important. And also the central bank has started looking at the things that are possible. That's also something that I took away from this engagement. And of course, the third point is that we all agree that there's value in open banking. Even those that are involved in the traditional banking environment also see some value in open banking. And of course, in that context, we are all promoting the concept of collaboration. So I want to thank you all because you have joined us since we started, and you have stayed up to this point. I want to thank you for your time, and we appreciate you for joining us in this open banking conference. I also want to thank all our speakers for the insightful discussions and analysis. We are most grateful for your time and the knowledge that you have shared with us here today. And finally, I want to thank all our sponsors, Capital Metrics, eTransat International, Wallet Africa, and 3Line Card Limited. And I hope we can continue to push these conversations and the progress on open banking. On that note, I thank you all, and I really hope that you have a great business day afternoon. Thank you, and God bless. Bye-bye.
Thank you.
Delight was actually started to tell innovative, exciting, and positive food stories out of Lagos, Nigeria.
Being the foremost luxurious goods company in the entire West Africa is a big deal.
Will you have every opportunity? No. But you see, the opportunities you lose on account of your value system, that's your opportunity cost for what you believe, and is the price you must be willing to pay.